Hello, everybody. Hope you're doing well. This is Tim, and I wanted to just show you a couple trades that I'm making today on Saturday, May 20th, and I'm looking to get these executed on Monday, May 22nd. So, what I did was I went to my undervalued stocks list, just taking a look here. I did some analysis on some of these, and so I'm pretty much staying away from Apollo commercial real estate just because of all the crazy stuff that's going on with commercial real estate. If you notice, like all most office buildings are empty now, so I'm staying away from that. But I did look into Dynex Capital. They're a real estate investment trust, and they seem pretty solid. They got a great algorithm score. So yeah, I took a look at them, and I looked at their options chain, and I decided, you know what, I'm going to go ahead and do a buy right cover call on them. And so let me go ahead and bring up the analysis that I did on that one. And then we'll take a look at that in a second. But let's look at their options chain. So I was looking at July 21st because I always want to be, at least 45 days out. So 1250 is going to be the next one that's out of the money. Um, so I went ahead and did a buy right cover call on that, place that order. Let's look at the profitability of that, how that's going to work. So here's the ticker. Current share price is 1088. I bought 300 shares, so I'm selling three cover call contracts on it. And I'm doing the 12.5 strike, expires July 21st. Um, these guys, another something I like about these guys is they pay a monthly dividend. So if I go back and take a look at them, um, looking at their financials, first of all, their algorithm scores are pretty darn good. And went down to their dividends, and I can see that the current dividend amount is 13 cents. That was declared on May 19th. But then I'm looking at their 5-year dividend payments count, and that's 56. So basically, they're paying a dividend every month. So I like that. Um, and I have 60 days till expiration here, and I'm anticipating. I don't know if this is going to work out or not, but I'm just putting in 15 cents premium and then a 13-cent dividend. That could change a little bit, but when I plug these numbers in, I'm looking at max profit of $658, which is a little over 20%. And if you annualize that, that's 122%. So I think that's pretty good. So now what I want to do is let's take a look. I'll close this out. Let's look at the next one that I was interested in. So I come in here, go to my undervalued stocks list, and I've been looking at STLA for a while now. I think they're pretty solid. They don't just manufacture uh, cars. I mean, they do parts also. So um, I think they got really good fundamentals. Let's look at this. They're already on the growth list, which means they're checking off a bunch of boxes here. I got a great PE ratio. Their debt is great. Let's look at some of these values. So the PE is incredible, 2.91. That's great. Look how it compares to the industry. Um, it's actually lower than their 5-year average, which is always good. Free cash flow ratio, anything lower than 10 is good, and this thing's 1.13. That's really good. Um, they're undervalued, right? So their book value per share is $22.90. So that's what that is. It's the company's total assets minus total liabilities on a per share basis. So they don't have too many shares outstanding, which is good. And they're probably going to be doing some buybacks. So that could even raise further. Cash per share, 1482. So that's good too. So they almost have as much cash as what their current stock price is, which that's pretty incredible. Um, let's look at some more statistics for them. Um, we're missing out on the dividend. They do pay a great dividend, but they only pay it basically once a year. They already paid it. Um, the ex-dividend date was April 24th, so that's okay. We missed out on that, but they're doing good. Their earnings growth is 17.5%. That's fantastic for the quarter. Um, net income, not bad, not bad. I mean, they're making money. So their revenue growth though is 19% year over year, and they got a nice 5-year revenue growth. And their debt, this is what I like right here. Their equity to debt ratio, 0.8. That's fantastic. Current ratio, pretty good. To be on the dividend list, it needs to be 2. So the current ratio is just their current assets divided by their current liabilities. So it measures how they can pay their short-term obligations that are due within a year. Um, so this is pretty good. I'd like it higher, but hey, it's still pretty good. Um, and then I went to their options chain, went to July 21st, and the I want to do buy right cover call. So I want to get it just slightly out of the money, but still it's a 51 delta. So it's basically like an at the money covered call with some decent premium on it. It's about looks like the last price was 0.68. That's pretty good. So let's look at let's go ahead and take a look and see what the numbers look like. So the current share price is 1660. I want to do 200 shares. I'm hoping to get those locked in on Monday. I'm going for the 17 strike. They expire July 21st. This is the premium. There's no dividend. I took the dividend date out. It's going to be about a dollar commission. And when I plug this in, this one doesn't have as high of a return, but still pretty good, 10%, and then annualized 62%. So these are the trades I got going, and I hope this was useful to you. And you can go on my website and you can see these for free. Everything that I did here was free, and you can you know if you want to download only the spreadsheets though, that's when you'll need to sign up for a subscription. But anyways, I hope you enjoy this, and I appreciate your time. Thank you very much.